Okay, hello everyone. Welcome back to my channel, Easy PC Forex. So today I'll be talking about the winning streak model. It's actually my winning streak model. What's the model I use to, you know, make profits every time in the market. So please like this video. Consider subscribing, turn on notification so you can be immediately notified when I make more videos like this. So this particular video will be in like 4 to 5 parts, and it's a very enlightening one. It will make you more profitable as a trader. So let's delve in now. Now the winning streak model. Basically, in this part, what I will teach or what I want to teach, it's a London trade. Okay, there are part of this model that works in Asia. There are part of this model that works in the New York. But what I'm dwelling on specifically now, it's a London trade. And the objective of this model is to target 20 pips, nothing more. Now, based on experience and other things, I can get more than 20 pips with this model and all sort like that. But I restrict this to 20 pips. In my last video, when I make a video about how to raise trading funds, okay, I calculated with 20 pips stop loss and 20 pips take profit. This is just the simplest and the easiest model that you can ever see out there to deliver to you 20 pips per day. Okay, so the objective is to target 20 pips. So 20 pips stop loss is also to be used, not extended. So in this case, we are talking about a ratio 1-to-1 risk to reward. Your stop loss is 20 pips, your take profit is 20 pips. Very easy to calculate. In fact, if this is all you know how to do, I promise you, you will keep making money consistently in the market. And that's why the aim of this model is consistency of 20 pips profit per day, like every trading day. Now, you might not make profit every trading day following this model, especially if you are very new. But I promise you, out of the 5 days in a week, you can make profit 3 days, or most of the time 4 days. You are gonna see it's not gonna be something I'm just talking by words of mouth. Okay, so the model is highly rewarding, but like every other forex model, it requires your discipline and your patience. Okay, and now what are the important things to note in this model? Number one, you must have your weekly bias and anticipate the weekly power of three. Okay, now I taught power of three to my students, and they already know what it is, so I won't go deep into that. You must know the weekly bias. When you open your chart, where will the market draw to? And we call it bias because it is your own sentiment based on your own analysis, not something that you can never be wrong with. You can be wrong with your bias, and actually there's no problem. In fact, I can be wrong with my bias and still make money with this model, because it's actually just very simple. So you must have your weekly bias, and also each day you must have your daily bias. And the understanding of power of three, daily power of three, will help you a lot. A lot, a lot. In fact, I know traders that just trade with the power of three alone. So the third one, the market maker weekly manipulation model, will help you anticipate the low of week and the high of week. Now this is for traders that a little bit experienced. They are no longer newbies. So, but in case you are new and you don't know anything, just you might even ignore this step, but getting the information and learning it will help you better. Okay, so now how do you frame your setup for this winning streak model? How do you frame your setup? Things that are very easy to do. When you open your chart, the first thing you do is the previous week. What is the high of that previous week? Put a trend line on it, draw it out in time. What is the low of that previous week? Put a trend line on it, draw it out in time. Then you drop down again to the daily time frame. When you get to the daily time frame, what is the high of the previous day? You draw it out in time. What is the high or the low rather of the previous day? You draw it out in time. So basically you have the previous week high marked on your chart, the previous week low marked on your chart, the previous day high marked on your chart, the previous day low marked on your chart. So the next thing for you to do, very simple, is to drop to the 15 minutes time frame. You see, I'm very precise with what I'm saying. So I know what I'm doing. I've practiced it over and over and it has delivered. Okay? And I'm going to show you practicals. Okay, so after you dropped to the 15 minutes time frame, what will you do next? The next thing for you is to mark out the Asia high and the Asia low. I repeat it again, don't forget, this is it is actually that this model, you want to work with the Asian session, but you are not trading the Asian session. The Asia session is already completed. Okay, so because it's already completed, for my students that I taught on the lecture on liquidity, liquidity areas, one of those areas that are liquidity area is the Asian high and the Asian low. There is liquidity on the Asian high, there's liquidity on the Asian low. So they already know that. So that is why the Asia range is very important. That's why the Asia range is very, very important. So once you drop your chart to the 15 minutes, the next thing you're going to do is you're going to mark the Asia high, you're going to mark the Asian low. And for people that don't know when the Asia session is, the range is from 20 p.m. Eastern Standard Time to 00 Eastern Standard Time. Eastern Standard Time is not Nigerian time, and I won't convert it for you. Okay, go and convert it to your own time, to your own local time. I don't know, you might be in Nigeria, you might be in Ghana, you might be in Uganda, you might be in any part of the world, India, and whatsoever part of the world you are from. Convert the Eastern Standard Time to your local time so you won't bring confusion to yourself. Because there's something many people don't know about Forex trading. Once you miss the time, your analysis will go wrong. Because the Forex algorithm, the artificial intelligence that is built together in the Forex algorithm, they work based on two things. Number one, they work with time. Number two, they work with price. If you go outside of the timing, it doesn't matter what your analysis is, it's going to go wrong. So the timing is very important, and I am emphasizing this. Okay, so what you need to do, mark the Asian high, mark the Asian low. Then okay, when you mark it, then the next thing, now in case of short, maybe you want to sell, or the market is going to sell, or short scenario, what will happen is that at 2 a.m., notice I'm specific with time. I'm very specific. These are things that are not random. In fact, even if I'm at work, okay, I know the time that I can say, oh, please excuse me, just give me 15 minutes. Because I know what I want to do. I know everything. It's on my mind, it's in my head, and there's no confusion about it. So at 2 a.m., price, 2 a.m. Eastern Standard Time, price will be closer to the Asian high. This is if the market wants to sell. If you're anticipating a 20 pip sell, price will be closer to the Asia high in anticipation of the Asian high raid. I told you there's liquidity on the Asia high. So it wants to raid the Asia high. So the second thing that will happen is that at that 2 a.m. or around that time, okay, the price will go straight and it will purge the Asian high liquidity. Some people call it liquidity grab, call it liquidity purge. So it will grab the Asian high. So for me, immediately it grabs the Asian high, I put in my sell order and I use 20 pips SL and 20 pips TP. What will happen 90% of the time is that my TP will get hit. So I anticipate immediately that market cross, that Asian high, I put in my sell order. instantly. In fact, if it were times that I'm busy and I've already watched the market and I notice that okay, it's as if it's coming to take the Asia high, what I'll just do is just put a sell limit. I'll put a sell limit on the Asia high, then I'll put a 20 pip stop loss and a 20 pips TP. That's how you do it. Now, on days where the Asia high, there will be some days. This is the reason why I said you should mark the previous day high and you should mark the previous week high and lows. When the Asia high is close to the previous day high or previous week high, sometimes it might be close to it, maybe with 20 pips, sometimes with 15 pips. Do you understand? Sometimes even with 10 pips. But when it's close to it between 5 to 25 pips or from 0 pips to around 25 pips, pay attention. Pay attention to the previous day high and previous week high. What will happen most of the time is that the market will take the Asian high alongside with the previous day high or previous week high, then it will sell. So in that scenario, what you do is that you anticipate a raid on the previous day high or previous week high. So you put in your, immediately the market raids it, purge that liquidity, you put in your sell order, 20 pips stop loss, 20 pips take profit, and most of the time your take profit will get hit. The reverse for the long scenario, remember again, specific about time. At 2 a.m. Eastern Standard Time, price will be closer to the Asian low in anticipation of the Asian low raid. So immediately the price purge the Asian low, what I will do next is I'll put in my buy order, 20 pips stop loss, 20 pips TP. Okay, and most of the time the TP will get hit. Now on days where the Asian low is close to the previous day low or previous week low, sorry, it's low I meant to write. So you anticipate a raid on the previous day low and previous week low. That's what I meant to write. So what will happen is that you buy that raid, 20 pips stop loss and 20 pips take profit. Now there are exceptions to this rule. Okay? And the exception is not something that is just assuming that okay, the trade goes bad. What will happen? You've lost 20 pips. Okay? And I don't think that's too bad. At least for a beginner. It's not even a bad thing at all. It's not bad. But when you begin to lose 100 pips and all those hey, but it's not possible with this model. Okay? In one pair, in a week, you are going to win 3 times. Minimum 3 times you are going to win. That's because maybe you are a newbie or maybe because you are inexperienced. Now the exceptions. Some days market might aim high without purging the Asia low and you just keep going up like that. And also in some days market can just begin to drop and it will not purge the Asia high. What will happen is that those days, that will be the days that you lose. Because by the time the market is going high, you think the market is coming to purge the Asia high. So you put your order in, then you put 20 pips stop loss, then it will go and bust your stop loss. It will be a losing day for you. And there's nothing bad in losing. So you're going to accept your loss. Okay? Then you wait till the next day. Alright? You wait till if your stop loss hit or your take profit hit, what happened in this model is you wait till the next day. I have so many models that I can teach you. Okay, but let me start with this winning streak model. Okay, good. So those days will be losing days for people that are inexperienced, the newbies in the Forex market. But for a more experienced trader, you will understand that what happened is that the market has recently traded into a higher time frame price delivery array. Okay, so but for a newbie that does not even know how to cite the higher time frame PD array and all of those kind of things, he won't know. But for an experienced trader, you know that this price is not likely to come down lower, it's not likely to go up here, this is what's likely to do, this is what it's likely to do. So for a more experienced trader, the person will anticipate it and the person will be profitable. But for those that are not experienced, it will be a losing day for them. But they lose today doesn't mean that they're not going to win it tomorrow. And like I said, out of the 5 trading days in a week, you're going to win like 3 times. That's the minimum that you're going to win. If you pay attention to it, I'm talking about on a single pair. on a single pair. And the favorite pair where I do this is on the cable, the GBP USD. So in the next video that I'm going to upload after this today, also I'm going to do a back test of what happened this week that we just concluded and the previous week before. Let's just see this winning streak model I'm talking about. Let's see it live in the chart. And as we see it like that, you are going to backtest it on any pair that you choose. Okay, then you are going to do a front testing, a forward testing to see, okay, next week now when the market opens, this winning streak model that this guy talked about, let me see where is the previous day high, where is the previous day low, where is the Asia high, where is the Asian low. Let me see whether it will work the way he said it will work. And I promise you, you'll come back to thank me. Okay, so I'm going to upload this one, then the video that will come next, it will I will go straight to the practical charts of what happened in the previous weeks. Okay, please do consider sharing this video with your friends, people that you want to be profitable in the forex. And this is one of just the very things that you can do for me also. So till next time, I wish you good luck and good trading.